The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. Thanks for coming out this fine fall Friday afternoon as we approach Thanksgiving. Amazing. We take one day a year to count our blessings. To realize how thankful we should be. The attitude of gratitude that should embrace everything we say and do. So, anyway, pass the potatoes, right? We have an attitude of gratitude every day, right? All right. Well, I'm grateful you're here today. I want to talk to you about the trial you've been on. A lot of you took the trial this week, and based on the comments I've received from you, you're excited, you're surprised, you're happy. Those are all good things. And I'm just here today at this exit webinar. You've ended your trial, and so you should potentially. I try to be as clear as I can, and we're going to do a couple things today. We're going to go through just briefly the history of the alerts. We had a beta test. We just finished week 13 post-beta. So it's a total of 16 weeks. So we've really finished out a quarter, more than a quarter. We've got 4 weeks at 4 weeks a month, 4 months, that's 16 weeks. So if you don't count beta, then you got a baker's dozen on a quarter, 13 weeks instead of 12. I haven't averaged them all together. I don't know what that number is. I'm going to find out today, live. I've been that busy. I do recap every week. We had a recap midweek. Midweek, we had 24 thumbs up, and I think 2 thumbs down, 2 or 3. We'll look at it in a minute. Stop outs were about 11% of total production. So we'll go through, we'll look at some alerts, we'll talk about anything at all that you want to talk about, anything that you have questions, entries to exits to how do you stay in the trade, or whatever it is that you need. Okay, whatever it is that you need. So just, you're gonna have to work that chat box, type in. If you happen to be someone who is somewhere and you don't have access to a keyboard, well, you're gonna have to get hold of me somehow, but let me know. I can open up your mic. If you're just sitting out there listening and you can't type, you want to talk, you got to get a message to me somehow, and I'll be happy to open your mic. Hey Valerie, how are you? And Trevor and Will and Vito, okay. And Robert and Richard and another Richard. PK, Paul and Neil and Mikey. Hey Mark, didn't I just talk to you? Yeah, I did. A couple Johns. One later is better. Okay, there's a Jeff and a Joe and a Jack. A Denny, a Dan. A Brad, and the list goes on. Good to see you all. Glad you came out. But let's make this time productive. Let's make it fruitful. Let's accomplish good things. I'll talk about this chart for just a moment, and then we'll go look at the alerts. And again, I'm happy to answer any questions. You just gotta put them in the chat box. Wasim says, I didn't get invited this week. Well, Wasim, we can fix that. Well, the trial's over, so I guess not. Tell you what, do this, Wasim. Go to apply.cfrn.net. Do that. All right. Okay, so we know we've been selling off here in the S&P. Now, this bold move right here, coming off of this bottom, if you've done any kind of work or study in candlesticks, then you know that after an extended move to the downside, a show of strength like this, not only over one 30-minute candle, that's what these are, 30-minute candles, but two big green 30-minute candles. And when I say big, look at the low at 265 And the high of this candle, 282. That's a 7.30-minute candle. If we include this, we made it all the way up to 88 from 65. 23 S&P points in an hour. In an hour. So this looks very bullish. If we could slide those two out of the frame and just see the green candles, you can't always get it perfect like that. That looks bullish. People are falling all over themselves to get long because they want to trade back up to here. And on the other side of here is another 100 points to the upside, which I'll show you in just a moment. Now, now it's not looking as bullish as it was a few minutes ago, but we never saw it as bullish. And there's a reason. One reason, we're just above this weekly trading zone, and while weekly trading zones are an area, price is drawn to them, especially when they're this close. Okay, and this is close, and we only made it to here. Why here? Why did this thing do this here? I'm going to show you exactly why it did it in just a second. Okay, but the reason we never saw this as as a hugely bullish move, if I just throw these on there, whenever we have a bearish cross, when you look in the rearview mirror and all you can see is that bearish cross, then we have a short mentality until there's a bullish cross. This makes it, you don't have to do, there's not a lot of decision making. You look, once you know how to interpret, oh, that's bullish, okay, that's bearish. All right, you don't have to overthink it. If it's a bearish cross, I'm only going to trade to the short side. If it's a bullish cross, I'm going to trade to the long side. End of the story. It just makes it so incredibly simple. So while the world saw this pushing up, right, we saw price running into the BBC, bull bear cross, and that it would most likely cause downward pressure. We also saw something else. We have a weekly trading zone at 2789/90. How hard did price try to get up to test the zone to make its point? Now, we've been publishing the zones since December 14th of 2009. Every Monday morning, they go out to the partners at 6:15 a.m. Eastern. And once we publish them for the week, they're carved in stone. We don't massage them or manipulate them or change them. They're constant. And so price comes down through the zone after consolidating. Three things happen at a zone: consolidation, rejection, and the slice. We'll talk about consolidation because that's what's in front of us. We put in a leg. We then retrace back up to the zone to confirm it's going to be good resistance. And when we find out it is, that gives us the impetus to make the next trek down to the zone below, where there's a very high probability we'll consolidate as the market makes up its mind if it's going to attempt to go back to this zone or the zone below. Now it's Friday afternoon, markets are closed, futures are still trading, so everything I just said applies to Sunday night. So you can put this to work Sunday night. This is where price is going to close somewhere in this area. I don't think it'll go too much lower on a quiet Friday afternoon when stocks are done, and futures will be done here in 2 minutes. So if you got a position on, take a look, and then they'll reopen. And then Monday we have Veterans Day, but Michael checked on the radio today and it's not a market holiday, which it certainly seems like it should be. But don't we take Columbus Day off? I would trade Columbus Day for Veterans Day. Much, all props to Columbus. He found this place. But You understand. So price goes back to the zone. Now where's it going to go? It's going to most likely head to the zone. The only obstacle it has in its way is this blue CFMA1 climbing and this low right here. So while everyone else thought this was the takeoff to send off to the moon, we didn't think so. We said it on the radio. I said it in mentoring sessions that I was in. I said it in the workshop last night. Last night we were looking at this, and it was beginning to look like this candle here could send the market higher. But we saw this overhead and the zone overhead. So in the workshop last night with all the partners that were there and passport holders, we discussed the potential for this, which ultimately leads to this. Now, I said something else to them last night too. Someone had asked me to teach a little bit on fibs, and so I did in the workshop last night. And I used this daily chart of the S&P. And I drew fibs from the swing low to the swing high. Last leg up on the daily chart. I told everyone in the workshop, I said, I'm going to go over a couple numbers, write them down, because in coming days these numbers will be very important. I said 2766 is a number, okay? Now do you see that's the 24% Fibonacci retracement right there, 2766. I said everyone else will see 2766 as just another number on the chart. But because of what I've just showed you, you'll know that 2766 is not an ordinary number. Most likely there will be a Fibonacci bounce at that 24% retracement. This swing low, it's pretty close to 2766. The swing low was 2764.50. So it spiked it a little bit, gravity kicked in, and then we bounced from 2765 to 2791. 65 to 91. That's almost 30 S&P points. That's a $1,500 per contract move, which we anticipated, and we also anticipated that it would turn and start to move back down because of these dynamics that are in place that we use every single day. Whether you're in the live training room, whether you're in a mentoring session with me, working on the bigger picture discretionary trades, everything that we do has a reason. I can always explain it to you. It's always, I don't know, logical. It's logical. Logical is good. Logical means you don't have to spend a whole lot of time trying to understand some esoteric black box philosophy. It just makes sense. I break it down to you so that you understand. And once you see it, you'll never be able to unsee it. You won't forget it. Later is better wants to know, when does the price have to cross the MA1 in order to signal a trade, slingshot, or momentum? Are you talking about the trading in the live training room in the morning on the range chart? Or are you talking about these bigger picture charts? In the morning? See if Michael's here.
I'm here.
Hey, Michael, there's a question that pertains to the morning session.
Okay, hold on. I was just looking.
Did you see what I was just pointing out last night in the workshop? I sent you the link, right, to the workshop?
Yeah, that link didn't work. I created another one.
What do you mean it didn't work?
It only works for us when we're logged in. I created another one.
I grabbed that one?
Yeah.
You should have been able to, yeah, you just have to change the filter on it.
Yeah.
But however you got it, that's all. That's all that matters. So you're going to answer later is better's question.
When does the price have to cross the MA1 in order to signal a trade, slingshot, or momentum? Okay. That's not really the focus of this meeting. but the price usually crosses the MA1 before the MA1 crosses the BBC. I mean, almost always it drags the MA1 up, right? And
like this.
Yeah, yep. Price is already up above the MA1. Now the MA1's got to get up above the BBC, and then it's got to pull back to it. It's got to pull away from it, then pull back to it. That's the deal.
Now, it's still possible to get a short trade out of this. Now, this is on the range chart. This is from the morning in the live training room. You can still get a short, but as soon as this step line touches the BBC, which it will on the next candle most likely, then that cancels any potential short trade, and you wait to see if it's going to become a bullish cross, and you're looking at the long side. Is that about right, Michael?
Yes, that's about right.
That's about right. Okay. All right, so one more time, just so I'm going to give you the same thing I gave the guys in the workshop last night. I gave them 27.66, and price bounced 30 S&P points just to bang its head on the zone, roll over, and head for that target that we anticipate on the downside. At least another shot at it. Along with that number, and last night I said just hang on to these numbers because in coming days you may find them useful. The next one on the way down looks like 27.35, which that could be anything from 34 to 37, maybe. It's an area. Fibs are an area. I know they paint an exact point on your chart, and you can turn the price on. Somewhere in here. Where's it, Michael, you know?
You want to turn the price on, or?
Yeah, I was going to turn the price on. See.
Oh, I don't know.
I'm missing it.
I don't know.
Maybe this one doesn't do price. Today high and low. Number of levels. Stick to the nearest. Oh, there's something more at the top. Here we go. Up here? Nope. Alright, well, we won't worry about it. You can see the price. Again, it's an area, so we don't need that exact number. We just need to know the area. The area is 27.35. 50% retracement. This is your best bet for a huge leg up. Now, here's the deal. We have about 100 points to the upside overhead. From right here, 28.35 up to 29.35. That's 100 S&P points from here to here. And if we can pull all the way back to this 50%, then like a slingshot, it's going to rocket price up out of there. I think there's a high probability that happens. And then we have 100 points overhead before we run into any serious resistance. If we take this tool right here, and these are all tools that as partners and passport holders, when you need help with these, you just come see me. I book a one-on-one mentoring session. You have unlimited access. Drawing tools. We do a little more Fibonacci, but we only want the image. To drop it. And there we go. So if we go to the low here, to the swing high. Now, we just had a 24% retracement. I'm going to move the fibs for a minute. We'll get rid of them. We'll redraw them. All right. Now, I think I got it right. Yeah, from the low to the high. Okay. Oh, wow. There it is. If we just go to that 24% retracement, this is what Fibonacci price extensions point to the upside. So that certainly makes the 29.35 possible. If we get a deeper retracement back down to the 50% area, That still makes that 29, 30, 35 area possible. If we pull all the way back to the 62, then that becomes less possible, but certainly not impossible. Now again, I'm going to take these fibs and I'm going to go from this low to this high. So you've already written down that first number. Second number, 27.35, you wrote that down. 50% retracement, 27.10. And the one I said, if we get too low, then there's less likelihood that we make it all the way to the top. We make it to maybe here in a measured move. And that number is 26.85. Now, where's 26.85 in relation to where we are now? 26.85. What? What? Now, what in the world would the talking heads say on TV? Oh, this is terrible. It's the worst since the Great Depression. We're all depressed. Look at how far I had to go down. Everyone would definitely say that the sky is falling. But if we go back here, we don't break a sweat because we realize, okay, the market took a 62% Fibonacci retracement. Doesn't mean the world's coming to an end. It just means the next leg higher may not be as high as we thought it might be. But the market will try to bounce here at 38. It'll try to bounce here at 50. And it'll try to bounce here at 62. Now, you saw how far I had to scroll down to get to the 62, right? So, in the grand scheme of things, how long, if this is a 30-point move with the volatility we have going right now, I mean, how long do you have to be in a move on the 4-tick range to get your goal for the day? Okay, all right. Let me see if there's any questions I didn't answer. Michael, anything you want to throw in? Anything you want to add?
No, I'm just listening and watching.
Okay. Okay, so does everybody understand this? Why we think what we think? Insert indicators, CFRN. There we go. This is a bearish setup from the range chart that we use in the morning to a monthly chart. Bearish cross, price pulls away, price pulls back, down close. Is that bearish, Michael?
Hang on, let me look. I was reading something. Down close is bearish, yeah, and you have bearish separation down there, yeah.
Yeah. Yep, big 10-4. Oh, look at this, guys. I want you to consider putting a volume indicator on your bigger time frame charts. Let me show you why. I said I would show you this today, and I will. I'm going to have to get this out of the way for a minute. Okay. What I want you to be able to do is I want you to be able to see the average true range. You just go up here to Insert, Indicators, Volatility, Average True Range. Now when you open that up, it's going to look like this. And scroll down here and change the window to 48. In one Globex session, well, it's a 24-hour session, even though it's closed for an hour and 15 minutes. You got 48 30-minute candles, and we're on a 30-minute chart. What we want to see is what is the average range of a 30-minute candle from the high to the low over the last 24 hours. And that's what this gives us. And we're able to watch just the number. We don't have to look at the line, but you can't get the box without the line. You know what? I shouldn't say that. There probably is a way to get the box without the line. I don't know how to do it. If you know how to do it, teach me. And then the volume, I don't really want to see the bars right there. And I had it set up some way the other day that I didn't see the bars. I didn't see the line either, but they were still there. They were just shrunk closed, but these were open wide. When this number, you see how it's sitting still right now because the market's closed? It's going to open in 2 minutes and reopen, and these numbers will start to jump around. when you're sitting here, and let's say you just we just hit this weekly trading zone, and price starts to come off, and suddenly this catches your eye because it's spinning like a slot machine. It's just rolling over and over and over, and there's so much volume coming into the market. Well, you understand technically what this move is all about. You look, and that thing starts spinning. Apparently other people see it too. There's participation. Ride their coattail. Ride their coattail till they're done selling, and then just step off the train. Tip your hat. Go about your business. It's like finding money laying in the corner. Who's going to walk by money laying in the corner and not pick it up? Not me. Not me. Okay. All right, let's look at the alerts for, well, let me pull up Telegram. Telegram, if you're not familiar with it, is this application right here. Now, if I close this and close this, you can see all the different channels. We have a number of different channels, but I do that and then it kind of hides everything over there. This is this week's channel, week 13, or not this week's alerts. They're all in the same channel. So anybody who's a passport holder or a LOGIC247 member can go back and look at every single trade that we've done. It has a bigger week than I thought. Week 13. Okay. So last Sunday night, time had changed. I got here an hour early. I had to go goof off for 45 minutes, which wasn't hard. So we started out with a order to get short on the S&P, which never materialized. It did not trigger. I won't go into a long explanation, but many of the alerts we don't expect to trigger. However, if they do trigger, it could mean a big return on investment for a short-term trader. Next, we had a Dow YM trade from 25,160 to down to 130. And we were tipping the last week's weekly trading zone. We only got down to 25,131. The target was 130. We got to 131. Missed it by a tick. And because of that, we have to classify it as a PT, not a full target, but a partial target. 60, got to be 60% plus or better. If it's a multi-target trade, it has to at least hit the first target completely to qualify for a PT. Otherwise, if it doesn't qualify for PT, it ends up, if it triggered, then the only other option would be for a stop out. So the NQ reached the full or the final target, $400 per contract traded. The swing low was 68.65. At the time I posted the recap, there was no exit signal yet. And an exit signal is a very real signal on our charts using our indicators that tells us to the tick on an extended move what price to get out at. No second guessing, no question marking it over your head. When the signal appears, you believe it and you take your exit at that price. There's a no trigger. So this ended up dropping, I don't know where it went after that without going to look, but it fell after 400. It fell another 1,500 per contract available. At the time I recapped it, it was still underway. Here's a no trigger on copper. Here's a stop out on crude oil. We said it's 62.55. It triggered, but obviously it did not make it to the first target because it stopped out. Here's copper where we reached the target, 276 to 275. A 1 penny move in copper is worth $250 per contract traded. 1 penny. A lot of zeros after those pennies, but 1 penny, 264, 276, 275, $250 per contract traded. Question says, can you make the lines transparent? Kurt, tell me what you mean. Which lines? I'll give you a minute to type that in. So, moving on down. Here's crude, no trigger. Soybeans, no trigger. Here's an ES. If the ES pops on the open, consider being long 27.36 to 38 to 40. Trail if possible. This hedge is number 770. It does not cancel it. So in the final analysis, we reached the target. We reached the final target. 27.40 and then some. If the Dow pops, consider being long 25.460 to 25.480 and trail. This one was stopped out. Number 781. Consider buying the Russell 1554 to 1558. That's 4 Russell points. It's $200 per contract. And this was letting everyone know where the weekly zone was. And the final recap was a PT. The swing high was 1557.1. Now we were looking for 58. We got 57.1. So we got 3.1, 31 ticks instead of 40 ticks. But for the record, we got to call that a PT. It's not a, it didn't reach the final target. It partial. And then just some commentary as I put into the channel from time to time as it warrants it. The S&P is going to reverse and head lower, including all the implications that follow. This is the spot where it may happen. Okay, now that was put in there on Monday, November 5th at 7:33 a.m. my time, which would be 9:30 November 5th. 9:30 November 5th. Let's go back. $9:30. And we got this reversal, but the zone held it, and we took off. That's exactly what I was talking about there. So the idea is that you're able to go from comments I make in the channel to your chart and start to see the things that I see. And when you don't see them, you take notes, and because you have access to one-on-one unlimited mentoring, when you come into the mentoring session, you got a list of questions. We got to move fast today, Dwayne. I got 20 questions on my page. So we only have 45 minutes per session. Oh, yeah, and going into the elections, Monday night, or no, Tuesday. It's Monday or Tuesday? I guess it was Monday. It's my preliminary warning. Yeah, Monday, November 5th. Don't allow political agenda to color your chart or political angst. And then, okay, now we're on Monday morning. Yeah, we're still on Monday morning. With heavy volume over 100,000, ESZ8 the first 15 minutes, that's the S&P, of the day session, we may be about to witness a most magnificent head fake. We did. I commented that it was magnificent. And then we have a Russell alert that did not trigger. We have an NQ that triggered and hit its target, and I came back too late and I couldn't recap it. This one did not trigger. This was another PT. The alert was to sell crude from 95 down to 60. Missed the final target by 4 ticks. It was a 35 tick, $350 per contract alert, and we came up 4 ticks shy. It happens. I'm commenting on the ES previous signal. There's still hours later, a day later, there's still no exit signal. Current 30-minute candle could provide the exit signal, and as I recall, it did. This one did, right here. And this is the copper I was telling you about. One contract. See over here, the point values, $250. You got all these leading zeros. That's what price looks like on your chart. Okay, the Dow, consider buying the Dow, reached the target. Consider buying the Russell, reached the target. That was a 6-point Russell trade, $300 per contract. Well, the swing high actually was at 1572, so it was a little more than that, about 450. Here's the NQ. By the NQ, it's 73 all the way up to 93. So that's 20 points at $20 per point, so $400 per contract. The swing high was $1,200 per contract available. It hit the target twice. It went from the trigger to the target, came back to the trigger, and went back to the target. Is that something we see a lot of? That's something we see a whole lot of. And I'll just give you one example right here. All right, this is a trigger on the NQ to get long. Ran up $1,200 per contract. I was just talking about that. Back below the trigger, did it again. Gap below the trigger, did it again. That's 3. Gap below the trigger by just a couple ticks, and did it again. And that led us right into the next L2 entry, where it triggered once, it triggered twice, it triggered 3 times, and the third time it ran up $1,600. And as you came off that move, what did you do? You stepped right into another L2 entry, and the swing high on that was 1,600, 2,000, right up to the weekly trading zone, about $4,000 per contract on that move. We see that repeatedly. If I go to the S&P and just scroll back a little bit, here from 36 up to 43, that's 8 points, back below the trigger. Now from 36 up to 46, 10 points. And we move down, we come right back up, same area, yep, except we got a new alert, a new trigger now, 2740. So there we go once, there we go twice, and we move up into another alert where we go once, twice, 3 times, $900 per contract on the third swing. And the second and third swing will almost always require less risk, and they have higher profit potential. All right, so back to what we did this week. That was just what I just showed you, stemmed from this. Important prices, important areas are almost always tested. So we had some no trigger on the S&P, Crude, Russell, NQ, stop out. That's the Australian dollar. No trigger. Reach the target. That's the euro. And this is the Swiss franc. Swing high was a little better than the target. ES reached the target 2 times. And then on Tuesday, I think I was questioning 10 a.m. reversal, job opening miss. This was our daily double. Thumbs up, thumbs up. They both hit their target. How about that magnificent 10 a.m. reversal? Consider buying. This is the ES 47 to 49. Every now and then I'll forget a symbol. If I do, you should recognize the price. If you don't, you hit me up at the discussion channel and I'll let you know. So this one reached the target. Swing high was 27.87, so it ran up 12 points more than the final target with no exit signal so far when I posted this at 6 p.m. Tuesday night, my time. The Dow, we hit the target plus. This was the swing high. We were 58 points above the target when I posted this recap. Here's Crude. It's a $200 per contract alert there. Reached the target. NQ, Swing high on first trigger was 70.79. So that's almost $600 on top of the $200 that was already in here. No trigger. And that's just for waiting for the exit signal. All you got to do is wait. You don't have to wait. If you do, it works out. Consider buying ES swing high was 2 points shy of weekly trading zone 2789/2790. The Russell swing high hit the weekly trading zone 1571/72. Crude swing high hit its weekly trading zone at 6315/6320. Look at your chart and ask, is there one more leg coming? How will you know if this is a retracement or the start of a reversal? Most people don't know, but you can have some assurance that you're at least on the high probability side of the equation. Let's buy the NQ some more. This ran up $1,700 per contract available. No trigger. Reached the target. The swing high was, we were looking for 900. This was at 260.30. 130 points higher when I clocked it here. And still going. Russell posturing for higher prices. ES and NQ as well. Dow struggling to get airborne. Just trying to give some kind of guidance, because if you're watching the chart in the moment at that time, it all makes perfect sense. Next day, another 10 a.m. reversal. Daily double got stopped out. Daily double rang true. Here's an S&P. It not only reached its target, there was a 10-point trail available at the time I recapped it with no exit signal as of yet. Reached target, 60-point trail on the Dow. The Russell, that's a 4-point and trail. Reached the final target. That's $200 per contract. And it goes on. So this is what I did the midweek recap. It was 24 alerts, 24 thumbs up, 3 got stopped out. So 11% were stopped out, which I guess that means if 11% got stopped out, that 89% were in the money, as they say. Dow got stopped out. Reached final target, or the target, reached target. This is a PT, reached the first target. No trigger. Reached the target plus 8 points. PT, reached the first target. Swing low was 2801.50. We were looking for 2800. That was a 5-point alert. So we got there was 3.5 of it made available. In Q, reached the target. I hear that's a great show. I don't know if you've ever checked it out. FOMC day, which was Thursday. Kind of weird to have FOMC on a Thursday, but that's what we had. Reached the target here on copper. Again, that's $250 per contract. As the market struggles to move higher, check your indicators. What has to happen in order for the market to make a confirmed move higher? Well, the answer was bullish cross, and it didn't happen. 10 a.m. Another call for 10 a.m. reversal. Consider buying the Dow, 2630 to 2650, got there. Daily double, I don't remember if that one got there or not. I didn't recap those. I think they both did, but I'm not sure. Alert number 822. 822 alerts since beta. This isn't counting beta. This is, we started with number 1 after beta. Let me see. I wish you had held one of these meetings before the trial. Would have made all the difference in the world. Oh, sure, Jeff. You say that now. I'm teasing. 10 a.m. reversal Eastern Standard Time, Arlene. Yeah. What else did you say, Jeff? Do you have any stats for which instruments made more targets versus which had more stop outs? Well, I mean, for the first 3.5 days, we had 3 stop outs. So, yeah, we could look at that. I haven't. Have I broken it out? I haven't. Let's see. Oh, I can come right over here and I can say stopped out. I think. Look at that. Every stop out. Boom. I love Telegram. There's a lot of apps we could have chosen from to complement our service, but this one, it just works. You know, it just works. So let's see here. Now this would be during this week. I'll click on that, and that'll take me to this stop out. So this stop out was today. Yeah, this one was today. Now this is showing Mountain Standard Time, so you got to add 2 hours onto that. So at 9:26 a.m. I recap this as being stopped out. The next stop out. Oh, what was that again? Okay, that was copper. So copper got stopped out. The Dow got stopped out. That's the recap. Australian dollar got stopped out. Dow got stopped out again. Crude got stopped out. And we're getting back into last week now. So this week we've had, what day is this? Come on. Monday, November 5th. Monday, November 5th. Oh, so we could go back all the way to the 4th. Yeah. Yeah, the 4th. Okay. So there's crude. And what's next? Oh, so that takes us into the previous week. So this one here, because the week 13 signs right there. Okay. And so this one was crude. So we had crude, we had copper, we had Australian dollar, we had the Dow twice. But that allows me to calculate this. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Yeah. All right, so 6 this week. Oh, very good. 6 stop outs. Gotta write that down. Jeff says, I'm sure it changes from week to week, but if you only have enough account size to trade maybe 2 instruments at a time, just to know which were the best performers. I understand your line of thinking, and that does, I agree with you. That is a logical way of thinking. Okay, I'm going to write these down. There were 6, and you said, I see you've written it down. So YM twice. YM times 2. 1 ES. No. Crude once. Australian dollar once. The 6A. So that's 2, 3, 4. What were the other ones? Okay, this one is crude. This one, Dow. This one, Australian dollar. This one, oh, that's right. That's a recap. I don't count that one. So there's 5 stop outs, not 6. Didn't think that sounded right. Number 812 stopped out. That's the Dow. And 831 got stopped out. That's copper. Did you get that, Jeff? So I don't think there is a, I think when you start to break it down, hear me out. We trade every market the same. I don't look at gold any differently than I do crude or soybeans or the S&P 500 or the Dow or the Russell or the NASDAQ. In auction-style markets, price channels back and forth to accomplish its objective. If the market's objective is to move higher, put in a new high on the session or the day or historically, it's going to channel back and forth, back and forth. It's going to go leg, retrace, leg, retrace, leg, retrace until it accomplishes its objective or fails to do so. If it's trying to put in a new low, it's going to channel back and forth. There's going to be all kinds of rallies on the way down. Back and forth, back and forth. And so what you're doing is you're just simply taking advantage of the swing in the market. Our indicators and methodology make that simple. Not easy. There's no easy button in trading, but it does make it simple. So for whatever that's worth, I offer that to you. I think if you try to say, okay, well, the Dow got stopped out twice last week or 3 times, whatever it was it 2? Okay. To say, well, next week I'm not going to trade the Dow. Yeah, but how many times did the Dow not get stopped out? There might have been twice as many Dow alerts as there were crude alerts. And I'm just pulling that out of the air. You follow me? There might have been twice as many Dow alerts as there were crude alerts. I don't know if that's the case. I mean, you can go through and extrapolate all the data you want. But then you also are in danger. I don't want to insult anybody's intellect, especially my own. But you're in danger of overthinking the whole thing. It's not easy, but it can be simple. Simple implies don't overthink. Read your indicators. See what the color tells you, and even if your gut tells you to go the other way, I have learned, and my gut always thinks it's right, but I've learned the indicators are right 9 times out of 10. When I fade them, I'm not loving myself. So, okay, so that was those weeks. Now let me pull this down and let me go back and show you just how primitive this all was in the very beginning. Okay. Here is, and this is open to the public, so anybody that wants can go in and hang out. Oh, don't do that. Hang on, let the wheel go round and around. The beta test channel that I'm going to show you, you can go in there, you can walk around, take a look. That's one of the few times Telegram's ever crashed on me, and that's because I clicked it wrong. So let's go there. Okay. So this is at the very bottom. I mean, there's just a bunch of random posts in here. This is open to the public, so anybody that wants can come check that out. Now, if you require a secure channel for your messaging, and a lot of people do, let me know, and I will set something up for you. Okay, you don't have to worry about that. You can't be seen hanging out in a chat room or have your name pop up on a Telegram. I understand, and I'll take care of it for you. Yeah, Jeff, that's you hit the nail right on the head. Analysis paralysis. And I was the worst of the worst. Well, me and Michael together were the worst of the worst. We had more indicators and oscillators screaming at us from our charts. The noise was just overwhelming. And as we began to strip away things that weren't contributing to the bottom line, the view got so much clearer. You know, I thought all these indicators are like making me stronger and smarter. They were killing me, breaking me. So July 15th, that's when I created this channel, and I guess July 16th was the start of the beta, perhaps. So you can come in here. I won't read all this now. You can come in and take a look. But it just sort of lays the ground rules, the concept of everything, who we are, what we do, how we do it. And all you got to do is on Telegram, just search CFRN beta test, and it'll pop right up. You can just click and go in because it's open to the public. This is probably good to read. Remember, your hard stop is placed as I have taught you and as the chart shows you. If neither of the charts present give a truly high probability setup, walk away. Put the mouse down, walk away from the platform. There'll be more opportunities throughout the session. If you get yourself wondering if this one is high probability, you need to run. Don't walk away, run. Any setup that does not offer a minimum one-to-one risk reward, don't do it. I don't like that term. I'll be happy to tell you why some other day. Bad math, bad science. You have the entry and the target. The chart will show you your stop loss. I will teach you how to find that stop loss. We'll spend as much time in one-on-one mentoring as you need to get it down. It's very simple. Probably one session will do it. Important prices, important areas are almost always tested. You just saw that on those two charts. The risk required is often much less than on the second or third time an alert triggers during the session. So see, when you turn off the alerts at night, it's time to go to bed, turn them off. When you get up the next morning, alerts have come out overnight. And so the second you turn it on, you've got stuff that's backed up overnight. So you start sorting that and stratifying. So you go look at the Russell or the Crude or the S&P, whatever it is you trade. You go, oh, man, that alert came out. And look at that. On the London Open, it triggered. It ran to the target. Now it's almost back below the trigger. Woohoo! Because you're going to get an opportunity with lower risk. And that should be exciting. And by the time you're done dealing with that and the other ones that piled up while you were sleeping, there's fresh stuff coming out the end of the pipe. The pipeline is flowing. The pipeline starts flowing at 6 p.m. Eastern on Sunday night, and it flows until 5 p.m. Eastern on Friday. Some of them doing webinars. Okay, this is a thank you to the folks that participated in the beta. And now you get into trade number 1, right here. The very first beta test trade was to sell crude at 70.20 if the opportunity presented. Profit potential of the trade was 45 ticks at $10 a tick, $450 per contract traded. And it got there. Okay. So we learned a lot along the way as we went through beta, feedback from all the beta testers who got a super smoking hot deal to become passport holders. Good times. So this is, like I say, open to the public. You can go through here. You can have a look, see, and see what you see. Should be a recap here somewhere. CFRN beta test. Final recap. Oh no, this is from Logic. This isn't the beta. It's posted in beta. Hold for me just 1 second, please. Okay, I'm back with you. All right. Let's scroll up and find. That wasn't it either, was it? Oh, that's week 6. Well, we're going to go through those in just a second, but I want to get back to the beta. Okay, here's beta 42. Alright, we're closing in on the end of the beta. I just want to look at the recap. I'm not going to go through all the different alerts. You're welcome to go look at those. I mean, I encourage you to. When I say we learn things during the beta, I just simply mean how to put the data out so that everybody's kind of on the same page, understands it. How much further could it be? Is that the end of it? Nope, not yet. I think we did 150 trades during the beta test. We should be closing in on the end of it right here. Yep, sorry, we're closed. That was the end of the beta test. Yep. I think. Should have a recap popping up here. I don't know if you've ever read this, but we'll see. 12 Google Plus pages that every trader should follow. I don't know these people. This is not paid advertising. But interestingly enough, number 4 on their list, your humble host. And I promise you, that's not a paid commercial. It was out over a month before I stumbled across it one day. But me and 3 other guys that I don't know, Greg and the Mercenary and Dan and me, and then it goes to Scott Trade. Then it jumps to notable organizations and companies. It goes from Scott Trade to the White House to the Federal Reserve. I never thought I'd be mentioned in an article positively along with the Federal Reserve, Option Monster, Wall Street Journal, Bloomberg. That's kind of a who's who page, and the fact that I got put on it, I just feel pretty humble about that. So I had to share it. Okay. Wow, maybe there is no recap. Q&A session. Ha. Nope. That's week 5. Post beta. There we go. I give up. Here, let's go look over here. Here we go. Public recap of the original beta. I ought to be able to find it somewhere. If I have one thing to change about Telegram, it doesn't scroll up as easily as I would like it to over here. It's like the little, and maybe there's a way to change that. So I recapped these individually. I don't know if there's a recap all the way at the top. Maybe. Just not a fan of that. I thought I had a... See, I recapped every single trade here. So this is public as well. So you can come in here and you can look at this. I know I've got the final analysis somewhere. It put us at about 80%, I think it was. Okay, at the end of week 2, 32. Okay, so I guess that means there's an end of week 1. No, I think it just starts with end of week 2. Okay, so this is week 2 of the beta. 32 alerts were issued. The initial target was reached by 7. Final target was 15. First target 7. No trigger 6. 5 were stopped out. On to week 3. Okay. We'll whip through week 3. Again, you can go back and look at all of these. Every alert. Now I'm lost again. You know what? I'm going to let you go in here and root around. A lot of good stuff. I don't want to hold you up all day. I don't have all day. So we're going to have to do it that way. Now, right here is week 7. We'll just pull some weeks out at random. Here's week 7. Had 118. Now this isn't beta. This was a 3-week beta, and then we went in. We started again at week 1. And so at week 7, we had 118 alerts. 24 of them just simply never triggered. At the end of the week, 2 were still open. There were 92 that were actionable. If you take away the no triggers from the 118, that leaves you with the 92. 57 hit the full target. Now, I don't know if you've ever hit the target 57 times in a week. Let me clear the air. Until I got enmeshed in LOGIC247 and providing these alerts, I had not seen 57 final targets in a week. But that's what we had. 17 PTs means it made it at least to the first target, and if there's only one target, it got at least 60% of the way there or better. $74 profitable alerts out of the 92. There were 18 stop outs. The probability factor, or some would say profitability factor, if you're doing percentages, would be 80%. And if we roll back up, here's the previous week from that. Week 6, post beta raw data dump, 69 alerts that week. See, market conditions can push it from 120 alerts in a week to 69. 8, there was no trigger. 9 were still open at close of business on Friday. 52 actionable alerts. 31 ran the full course. 9 got part of the way there. 12 were stopped out. I think this might have been the worst week. It knocked us down to 77, I think it was, on a percent basis. We'll look at one more up here. There we go. It's week 6. Let's go to week 5. 60 alerts, 11 no triggers, 32 ran the course, 8 partial, and 9 were stopped out. One more. One more recap up here. And maybe not. The good news is you can go in here and roam around and find it, if I don't find it. In a minute I'm going to stop looking. And that minute's about up. What number are we on? 81? I can't believe I must have just flown past that week. The recap. Oh well, here we'll do this. We'll come down here, and this we can bump up to last week and take a look at. It's just week number 12. We just finished week 13, week 12 last week. I would have done these ahead of time, guys. I thought it was going to be a big deal that we do them all together for the first time, but now here I am. Scrolling, scrolling, scrolling. Getting old too. Week 13. Okay. So week 12 should be right above that. Last week, 37 hit the final target. 6 got a PT. 11 were stopped out. This week we're pretty close to 90%. This week we would have been at 80%. So if we move up a little higher on the food chain. Oh, I gotta go way up. There we go. Now we have another recap here. Anybody that wants a copy of these, I'll be happy to send them to you. If you want a copy of the alerts, I'll put them in a channel. You can look at them. I'm going to find one more recap, and we're going to close this thing out. Getting long in the tooth. Everybody's tired. Everybody's been working for the weekend, and here it is. Monday, it turns out. I thought it should be a holiday. I voted, holiday, but week 12. 28 hit the full target. When's the last time 28 of anything hit the full? We've been very blessed. We really have. 8 PTs, 6 never triggered. 4 got stopped out, 11%. So there's that 11% again that we saw earlier. Arlene says, how much is the average stop out? We don't risk more than $300 per contract, Arlene, on any one trade. Our feeling is if you got to risk more than $300, you're better off just waiting for the next trigger, because that alert will probably trigger again. There's a high probability it will trigger again, and the second and third trigger almost always offer less risk. So whether you clip it the first time, the second, or the third, now we have a methodology of looking for the best possible stop loss as dictated by the chart itself. The chart tells us where to put our stop. We don't have to get it off CNBC or some guy on the radio or any place else. There's no magic. The chart says right here. You just got to know where to look and how to look and what you're looking for. And those are things that I teach in the mentoring sessions. Let's see, Jeff. I was sure I was in that channel already, but it looks like I'm not. I'd like it, please. Which one? The beta test? You should be able to just type in CFRN beta test. It's public, I think. It should be. It says public. Try it. Yeah, that's the beta test. Where the heck did it go? Oh, this one. Yeah. Right, I'll put this in the chat box so everybody can have it. Yeah, you just have to type this into Telegram and it'll take you there. See, it's a public group. So let me put that in the chat box here in the webinar. There you go. Just put that in Telegram in the little search box and it'll find it. The other one, this one, the original beta channel, this is where the alerts actually went out during beta in this channel. So let me hit there, manage channel, channel info. This one you need the link for. It's not public. I thought it was, but it's public for you guys now. There you go. There's both of those. Okay. There's also a public discussion channel somewhere, but not a whole lot of discussion going on. That's active. Yeah, that's all you need. Now, if you're a passport holder and you have the Concierge Trade Alerts, then we have we have this channel as well. It's a private channel, and this is where every night these go out as an email. It's more of like a report, but for the convenience of some folks, I just post them in here in this channel. So a passport holder has access to both the LOGIC247 as well as Concierge Trade Alerts, weekly trading zones, live training room every day, workshops on Thursday night, unlimited mentoring. You own the indicators. So never again are you left hoodwinked like everyone else. And it's an awesome move up. You got your zones to help you. This right here. I mean, we see this every day in the live training room on the 4-tick range. It's always right there. Okay, let me point you over here going to give you guys this link. Okay. I did, Mark. Okay. Right, so there's that link. And then I'm going to give you that link, that link. I'll give you this link. Guess what? Oh my. There we go. Pop-up sale. Now, here's the deal. The link on this, I haven't had time today to pretty this up. Last pop-up sale we had, 10 available at a fraction of retail. Passport's $900 a month. It's a 24-month lease. You can do the math. All right. Today, I'm going to make, as I do when I have webinars, I'm going to make 10 passports available at a fraction of 900 times 24. You'll see on the website it's $900 a month, which is a good price considering all that you get. It's a 24-month lease. At the end of the lease, you buy it out for $1. That means you own the indicators for life, you have the both alert services for life, everything. You don't ever have to spend another dime. Okay? Everything a trader needs, one low price. When you get down here, okay, this is from the previous pop-up sale, so don't let that. I'll try to come in and clean it up later. Now, when you click here, that's a dead link. It's going to be dead as soon as I fix it. Okay? So you got both of those links. Now I'm going to give you, if you want to take advantage of today's pop-up sale, you need to use this link. This is the one that's valid, the one that'll be honored. Yes, I know it's more expensive than the last one, and that's how it will be until I run out of pop-up sale material. So there you go. There's the link. If you want to take advantage, if you want everything a trader needs at one low price, you know where to get it. Futures Magazine years ago had an article, 9 out of 10 traders fail. Now that's an astronomical figure. What if 9 out of 10 pilots failed? What if 9 out of 10 would-be doctors failed? Would that be crazy or what? I mean, who would even try to be a doctor anymore if 9 out of 10 would-be doctors failed, or pilots, or plumbers, or electricians, or anything else? But we've lived with that number for years. That's crazy. There's a reason. There's a simple reason that everybody fails who fails, the 90%. They got nobody to teach them. If a guy can make money in the markets, what's his motivation to sit around and teach? Well, could call it a multiple stream of income, but I won't even go there today. I'll just say you've got the opportunity to become 1 out of 10. You're either going to be 9 out of 10 or the 1 out of 10. So it's up to you. And the only way you're going to become the 1 out of 10, talk to any professional trader and ask him, did you have a mentor? Did you have a teacher? The answer is going to be yeah. The next question should be, do you think you could have taught yourself? Do you think you would have survived? Do you think you would be as successful as you are today if you had not had a teacher or mentor? I'd love to hear that answer. Get group training daily, live training room, private mentoring, proprietary methodology, powerful indicators, around-the-clock alerts, everything you need, one low price. So read through this. It'll answer 90% of your questions. I'll be around later to answer any additional questions that you have. Okay? Now, any link that you find on here to go make a payment, the link that I put in the webinar, that's the link. Okay? And then there's more information on this page. It's kind of a repeat. 6 of one, half dozen the other. Okay? This is just my little pop-up sale page. All right, you got the links to everything. Let me put a chart back up. Can't hardly bear looking at that thing without a chart. I spend so many hours looking at charts. Okay, so we're closed up and headed home for the weekend. Globex Sunday night. I'll be here live. Alerts will start flowing at 6 p.m. Eastern. That link, that payment link that takes you to payment for the pop-up, Okay, now that's not a year. That's what everybody, they always go, okay, hey man, I signed up for the passport. Now that after a passport sale, they go, now that's good for a whole year, right? I'm like, oh, don't you read the fine print? It's good for life. They're like, what? All that for that? Yep, that's the power of the pop-up sale. All right, I did record this. It will be on YouTube in about an hour. youtube.com/CFRN. So if you came late, if you missed part of it, you can grab it there. If you have any questions, I'll be around. I'll be in Telegram. You can reach me there. You can reach me support at cfrn.net. You can call us 949-423-6464.
Yeah.
Next
and
webinar. Yeah, go ahead.
Yeah, I was going to say, if I can't pick up, leave a voicemail and I'll call back, or I'll have Dwayne call back. Okay?
Now,
Because I may already be on the phone.
there will be another webinar next week, but the pop-up sale price is going to pop up another $1,000. Okay? Arlene, just go to telegram.org. Telegram.org, and it's very user-friendly. Put it on your phone, your tablet, your PC, your Mac. You're good to go. No matter where you are on planet Earth, if you want alerts, all you got to do is turn them on. Here they come. You sit, you trade, you go back to your vacation, your vacay, your stay, your vacay, whatever you're doing. LOGIC247, where opportunity finds you. I'm going to close it out, guys. You've been very kind to stick around so long. If there's any final question, type it in real quick. Otherwise, just reach out to me on Telegram, by phone. If Michael can't pick up, if he's on the phone, leave a message. These 10 will go today, so if you want one, if you have questions, get a hold of me before somebody else does. Okay? It's not that I won't ever have any more at a special discounted price. It's just that I only have 10 at this price, and the next time we have a webinar and the next time we do a sale, they will be more. So, just so you know, I don't play games with all that. I don't the takeaway and all that stuff they do at the web. I don't believe in that. Just if you want to be a part of the family, we'd love to have you. And if not, we'll see you on the radio. Thanks so much, Michael. Anything you want to add?
Nope. This is a great opportunity for everybody. I mean, you get so much for this price. You know, the Concierge Trade Alerts alone are just about this price. So I would, if you can take advantage of it, take advantage of it. Okay.
What he said. Have a great weekend.
All right, guys.
Hey,
y'all have a great weekend.
I mean, we're definitely open for Veterans Day,
You
right?
know what? Let me look it up again right now. I didn't actually look it up this morning because I'm almost sure we are. But let me look it up right now.
It seems right that Columbus Day is a market holiday, but not Veterans Day.
CME holiday. CME holiday calendar. Thanksgiving, Christmas, and New Year's. Those are the next ones. That's it. Yep, nothing for Veterans Day. So I'll be here Monday morning. We'll be here. All right. All right. And that's it, guys. With that,
that's a solemn occasion. Really, they don't.
it is.
They don't do. Wow. Hey, did I show you this? I think I did. No, I didn't. Here we go.
Pop-up sale.
There we go. Boom, boom, boom. Windows 10 has, well, that's not Windows 10. That's actually.
You did show me stuff about Windows 10 yesterday. The waterfall and the canoe, the bridge.
But
and all that.
this little fader, I mean, that's just. Oh, I moved the mouse. Okay, all right. Boys and their toys. Have a great weekend. I'll talk to you soon.
All right.
All right, guys. Everybody,
have a great weekend,
have a great
everybody.
weekend.
Have a great weekend. We will see you on Monday.